Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most.
Welcome to the Open Treasury podcast. I am Jonathan, the podcast and video editor here at CTMfile and Strategic Treasure. My two guests today are Jack Large from CTMfile. Welcome to the show, Jack.
Hello there.
And Craig Jeffrey, managing partner at Strategic Treasure. Welcome.
Hello, Jack. Hello, John. And John, in addition to editing, I guess you're stepping in during holidays to be the host. So thank you.
Yeah, that's correct. The normal host, Pushpendra, is gone and he will be back in a week or two. Today, we are focusing on two themes, economy and debt, and banks, some deals and developments going on. We will cover 7 stories that have been released on CTMfile. Let's get started with economy, debt, and capital markets. The first story will look into the Chinese property developer, Shimeo, failed to make a principal payment involving some of their offshore debts. What do we know about this, and does this matter to us in the EU and the United States?
I would say that it particularly matters to anybody who's holding that debt. It's the largest default from China this year for overseas. They're the 14th largest developer, so it's a sizable amount. It's not one of the largest 5, but it's sizable. I think the concern there is does this foreshadow other things to come? So to me, this is a cautionary tale. You know, is there a recession happening? Is this going to reduce the number of firms through bankruptcy or default here? So the default is a concern in my view. Jack, what do you think?
For me, the biggest thing here is it shows that China isn't immune to the realities of real economies. That's the first point. And the second point is that property developers are always doing this. It's not the first one around the world. I think they should have much tighter central bank regulation, but that's nothing we can impact other than be careful. But it's part of a bigger field, as your 3 other stories here talk about. The world is running into severe economic problems. The UK, for the first time ever, had a current account in the last year was double the normal. It was at the level of 8.3%, which is the level that normally banana republics have. This default of a property developer is just an example of the stresses and strains across the world. I mean, the third successive rate hike in Australia, a nice little story on CTMfile, is another example of what's happening worldwide.
Yeah, and we'll get into that rate hike story in just a minute. The second story we have is on a recent report from the Financial Times said that 40 billion of European corporate bonds are now in a slump. Is this just after effects of the COVID shutdowns, or are we going into a decade of recessions? What do you think, Jack?
Yes, we're going into a decade of recession. I don't think there's any way around it. Not only have we had the global pandemic, we've also had the huge influence of the Russian invasion of Ukraine, which has affected not only food imports and exports, but also the global energy pattern. I don't think we can affect a global recession. All the treasurers I know are being very, very careful.
I was surprised to hear Jack say a decade, almost as much as I was surprised to say you asked that question. And I would have to say that seems like it's probably more reasonable. Concerns on the overall economy, the printing of money in so many places is creating a significant stress. We're seeing it. My question is, are we in a global recession now as the second quarter just finished? We'll find out about that later, but perhaps we're already in there. And we certainly see this in the corporate bond article that you talked about. Inflation happening, supply chain also creating negative currents and headwinds, and then the different elements of a formal recession. We've certainly seen recessionary periods. The formal economic definition seems to be rising. So it's not great economic news. I think it reflects what we've been seeing.
Agreed.
In Australia, they just had another policy meeting. They raised their cash rate by 50 basis points to 1.35%. We also have our story about corporate fundraising slipping by 25%. Those kind of tie together with raising rates. And Kevin Foley, the head of global corporate debt at JP Morgan, had a quote. "We had begun to anticipate the storm in the first quarter, and now we are really in it." This is their third rate hike in a short period of time. Why are they taking their time, just small hikes at a time instead of jumping? Are the rate hikes giving shelter from the storm, or are they basically cutting the sails and making people scared to invest, to grow their companies, and slowing the markets down and causing the recession to be worse?
Yeah, I think the central bankers, when they make these changes, making more smaller changes, I think is deemed more stable for the environment. People see and expect changes to occur gradually as opposed to large shifts. Its view in the marketplace is a component of that. The fact that these are happening every month, I would make this similar to if you're pounding with a big hammer, you're trying to bend a piece of metal. You don't try to do it in a single hit. Is perhaps what they're looking at. You do a lot of individual banging with it, and this is what they seem to be doing. Is it making a difference? It's usually well after the fact. When you can second guess things and look back in time to see, did they move too slowly? Did they make enough adjustments? I don't know. They're certainly trying to catch up, and seeing this as month after month they're making these adjustments, pretty significant size, shows that it's gotten away to some extent, not only in Australia, but in a number of other countries, and they're trying to catch up. How quickly you can catch up, that's the balancing act.
Yeah, so something tells me this is not the final rate hike, that we'll keep seeing this. And what do you think, Jack?
It's clearly not. The recession and the underlying pressures are not going away. I think we're going to be here for years. I'm not sure we're going to go to 15% interest rate, but it's certainly going to go higher. Again, the word is just caution. Be careful.
The other article that you talked about, John, was the corporate fundraising, particularly among the less high quality corporates. This slowdown, if we compare year over year, 6.6 trillion was raised in the first half of last year. That's a pretty good sum, and that's slid to 4.9 trillion. This dip is really reflective of what's going on, and to Kevin Foley's comments, now we are really in it. We're in the storm. I think people are realizing that. We're seeing that across the economy, both in terms of price for food, for fuel, and then caution in terms of corporates raising funds. They're only doing it sort of when it's really necessary or essential, and there is caution, as Jack urged there's caution across the board for the debt and the equity markets, certainly in a number of sectors.
So we are in the storm. There may not be a lot of wind in the sails, but we're still floating.
I guess that would be the case, and if you could work in the hammer and the anvil comment, that would be perfect.
All right, so moving on to the second topic, we're going to look at some bank deals and developments, starting off with the Bank of London and SAP Fioneer. This is an integration between SAP Fioneer's cloud banking platform and the Bank of London's API. They're promising an integrated real-time compliance, clearance, settlement, and payment solution. Who's going to be benefiting the most from this partnership?
I think the idea that these API libraries are being put into place, like SAP Fioneer, doing this, I think everybody who's using those platforms will benefit. But I think this is the general shift of building out these API libraries. So whatever platform or tool set you're using can communicate with your other partners. So this is one of many trends where these are being built out to make communication far more effectively. It's one thing to say, PSD2 is put in place where you have to open up your business to APIs for certain types of transactions, to now it's, open banking, open treasury, open tech is allowing people to do business in the platforms they're comfortable with and work with the partners that they want to without having to worry about as much, headaches in installing this activity. We're early in the process, so this doesn't solve every problem right away, but this is a good sign for simpler connections.
What Bank of London have done with the clearing systems behind them, they have revolutionized how we're doing clearing and settlement. And it isn't, and the reason that you've got a partnership between SAP and the Bank of London clearing systems is because it means you can set up clearing systems anywhere in the world very, very quickly, and they are high quality systems. I think we're going to see more from this than just a partnership. I'm actually going to think we're going to see new clearing systems right around the world. It's phenomenally impressive.
All right, Jack, I'm going to kick the next question to you. We have another partnership with Goldman Sachs Group and Derivative Path. This partnership is giving Derivative Path clients access to Goldman Sachs platform for foreign exchange, their transaction and rate pricing. Jack, what's a takeaway we can take from this?
It's part of Goldman Sachs's new dream of getting into the clearing business and doing it better, tying up with key players. Like obviously, if you're Goldman Sachs, you're going to have a relationship with a very good derivatives company, and Derivatives Path are very good. So we're going to see more of the Goldman Sachs penetration into the global banks, what they consider to be their natural place of position and it's naturally theirs. No longer. Goldman are really putting the skids under them.
I'll jump in too on this. Goldman Sachs since 2019 has been obviously planning before that, but pushing into the transaction business, on the corporate side. They did the consumer side with Marcus. This is that ongoing thrust here. Their TXB businesses, as they brand it. This is also a networking play, right? Being able to offer this to sell through almost 5,000 regional and community banks in the U.S. So a network play as well. So, just this ongoing bank deals and developments where people expand or focus or where they contract.
Interesting. So 2 partnerships, and then now we have a story on an exit. BNP Paribas, which was formerly one of the largest lenders to commodity traders in the U.S., is now withdrawing its commodities financing. We've had a couple stories about them lately. Did you see this withdrawal coming, and are other lenders going to follow, or will commodity traders just move towards other lenders?
No, I didn't see this particular thing coming, but we've seen this ongoing focus of different banks in different areas. Even trillion-dollar banks have to focus what they do with their platforms, what they do in their financing horizon. So this is, they sold their commodity financing over to MUFG, but they didn't sell their commodity derivative platform. So they're still focused in those areas. They've had a pullback in the U.S., selling, I think it was Bank of the West, fairly recently announcing that, and deploying that capital into the European area. There's favorable capital treatments. So this type of focus, getting out of certain types of businesses, moving into other geographies or other territories, is something that we do expect. We don't know exactly what's going to happen, but I think this is a natural, logical play for BNP Paribas to do this. Jack, is this just a normal business from your perspective too?
I think it is normal business in some ways, but it really illustrates how banks have tried to move into the States and not done it very well and have lost a bundle of money. And BNP Paribas know the European market much better, and no wonder they're coming out of the US. I'm not surprised. I didn't know about it, but I'm not surprised.
All right. Well, before we get to the final wrap up and your choice for the most important story of the week, I want to have a couple honorable mentions for articles on CTMfile this week. We have a couple on digital currency, the EU's regulation for the Wild West of crypto, And the crypto lender Vald suspends its withdrawals. So you can find those links and read more down in the show notes. And now, Jack, I'm going to kick it over to you to answer what do you think is the most important story that we covered this week?
The biggest story for me isn't here. It was in The Guardian this last weekend about the fact that the UK's current account deficit is 8.3% over the last year, which is absolutely huge. The number of billions involved there is huge, and that worries me enormously.
Craig, what about you? What's your top story of the week?
I was going back and forth on a couple of topics. One was going to be the third successive rate hike in Australia, but I think I'm going to shift it to the corporate fundraising slips. 25% is caution rules. I'm going to relay Kevin Foley from JP Morgan's corporate debt issuance group. We had begun to anticipate the storm in the first quarter. Now we are really in it. I think that's indicative and rolls up some of these other economic stories, from Australia to recession to corporate funding. This is probably the biggest impact across the board from my view.
All right. Well, thank you for joining us on this edition of the Open Treasury podcast. Please subscribe, and you can find links to the articles in the show notes. We will see you again next Friday.
This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.